What happens when your tax return says you are due in the vicinity of about $5,000 refund, but your bank account suddenly gets roughly $21,000 instead? Because that's the roller coaster in this case. The return asked for around $5,000 back, then on March 24th, 2021, a refund of roughly $21,000 showed up by direct deposit. That's not a small oops, that's a jump of nearly $16,000. And the tax court ultimately treats that nearly $16,000 as a part that shouldn't have been paid out. So today's theme is simple. A refund that feels like a blessing can turn into a deficiency that feels like a bill. Hello everybody, my name is Dvorkin. I am a certified public accountant in the state of California. If you like learning how US tax law works in real life, hit like and subscribe, because on this channel we review and analyze US tax court cases so we can understand how US tax law actually works when it meets actual humans and actual paperwork. In this video we cover the tax court decision in the case of Juliet R versus Commissioner of Internal Revenue, decided on February 10, 2026. Juliet R is the petitioner, the taxpayer who filed the case in tax court. The Commissioner of Internal Revenue is the respondent, the IRS side of the dispute. The opinion is by Judge Nega, and the whole fight is framed around the question the parties agreed was the only thing the court needed to decide: whether the erroneous portion of the refund was a rebate refund or a non-rebate refund. And yes, those phrases sound like something invented by a committee that hates joy. Here's what happened using court's own factual setup. For the 2020 tax year, the petitioner timely filed Form 1040 in 2021. The opinion says she was assisted by a professional tax return preparer. Her income, as described in the opinion, consisted of about $7,000 in wages and approximately $17,000 in unemployment compensation. She had one son, born in 2004, and the court notes he was under the age of 17 in 2020. She properly claimed him as a qualifying child for the year. Now we get into the credit at the center of this drama: the additional child tax credit, which the opinion abbreviates as ACTC. The court says she used Schedule 8812 and determined she was eligible for ACTC of around $1,000 with respect to her son. She attached Schedule 8812 to her return and claimed the credit. She did not claim any other dependents. The opinion emphasized she also didn't fail to report any additional dependent deductions, credits, or payments. So far, everything is normal. The return showed withholding of about $1,000. Altogether, the return reported an overpayment of about $5,000 and requested a refund of that amount by direct deposit. The opinion breaks that overpayment down is about $4,000 of refundable credit, made up of around $1,000 of ACTC and about $3,000 of earned income credit, plus about $1,000 of excess tax withholding. Then the plot twists. Instead of receiving $5,000, she received a refund of roughly $21,000 on March 24th, 2021, via direct deposit. And the opinion states that of that amount, nearly $16,000 was issued by IRS in error. So what caused it? The court explains that her transcript showed that while processing Schedule 8812, the IRS computer system adjusted the ACTC amount. The system determined the ACTC she was entitled to was about $17,000. An amount the opinion says corresponds to the amount of earned income reported by petitioner on her Schedule 8812. Let me translate it into plain language. The IRS computer looked at something on that schedule, grabbed a number that matched her earned income, and treated it like an additional child tax credit amount. In other words, it's like the system saw earned income and said, that's a cute number, let's make it your refundable credit. Not ideal. Based on that adjustment, the IRS increased her total refundable credit to about $20,000 and total overpayment to roughly $21,000. Eventually, on July 21, 2023, the IRS mailed a Notice of Deficiency determining a deficiency of nearly $16,000. The notice included Form 4549. The opinion notes that Form 4549 showed total adjustments of zero and tax of zero, but it also showed a negative adjustment related to ACTC of nearly $16,000, resulting in a balance due in that amount. So the taxpayer petitions the tax court saying the IRS was wrong to determine the deficiency. Now comes the legal fight. The IRS filed a motion for summary judgment on September 17, 2025, arguing it had erroneously adjusted the petitioner's ACTC, causing an erroneous rebate refund. The petitioner filed her own motion on October 20, 2025, arguing the adjustment was just a computer or clerical error, meaning there was no substantive recalculations of her ACTC, and therefore the refund was a non-rebate refund. This matters because the court explains the IRS has different tools depending on whether a refund is a rebate refund or a non-rebate refund. The opinion lays out the summary judgment standard. Basically, the summary judgment is for when there is no genuine dispute as to any material fact, and the case can be decided as a matter of law. The parties stipulated the important fact and agreed. The key issue was purely legal. Then the court goes into the deficiency formula. The opinion quotes the statutory definition. Deficiency equals tax imposed minus tax reported plus rebates, when there are no prior deficiency assessments. And now we need to define the rebate, because that's the whole battlefield. The court says a rebate is an abatement, credit, or refund made by the IRS on the ground that the tax imposed is less than the amount shown in the return. The phrase "on the ground" is legal language, meaning because the IRS believed the taxpayer's actual liability was lower than what the return showed. So the opinion explains that every time the IRS issues a refund, it can be either a rebate refund or non-rebate refund. And the distinction matters because a deficiency includes rebate but not other refunds. If the IRS mistakenly issues a rebate refund, meaning it misinterpreted the tax imposed under the law and paid a refund on that basis, it can recover the erroneous rebate by using deficiency procedures or by filing a refund suit. But if the refund is non-rebate refund, the IRS generally can't use deficiency procedures. It is limited to filing a refund suit under Section 7405 to recover it. So you can see why the taxpayer wants non-rebate and the IRS wants rebate. One path keeps the case inside the deficiency machinery, the other path forces a different kind of lawsuit. Both sides leaned heavily on the prior tax court case, the opinion issued on Thomas Tax Court Memo 2014. In Thomas, the IRS made an error by moving a number related to Social Security benefits into the wrong box, and the court held that mistake led to a substantive recalculation and therefore a rebate refund. The petitioner here tried to distinguish Thomas. She argued Thomas involved multiple step and intentional adjustment, while her situation was just a bare computer or clerical mistake. She also pointed to Form 4549 showing total corrected tax liability remained at zero, matching what she reported, suggesting no recalculation happened. The IRS, on the other hand, argued that processing the wrong amount of ACTC was a recalculation of the credit amount, and that's enough to qualify as a rebate refund. Then the court does something important. It tells both sides they're focusing on the wrong issue. The opinion says both parties made a fundamental error by focusing on whether the substitution of about $17,000 for the ACTC was itself a substantive recalculation, instead of asking whether that error led to a substantive recalculation of the petitioner tax imposed. In other words, stop arguing about whether the IRS mistake was sophisticated or accidental. The statute isn't grading the IRS on vibes. The court says the correct focus is whether the taxpayer's tax imposed was recalculated. And the court concluded that the record supports that the IRS did recalculate the petitioner's overall tax imposed. So the refund is a rebate refund. The opinion also addresses a common misconception, and honestly, it's an understandable one. The petitioner argued that there couldn't be a deficiency because her return and the notice showed federal income tax of zero. How can you have a deficiency if the tax is zero? The court answer is because refundable credits can make tax imposed effectively negative in the deficiency formula. The opinion explains that Congress expanded the deficiency definition in 1988 to cover disallowance of certain refundable credits, because otherwise taxpayer with no tax liability even after disallowance couldn't get tax court review. To fix that, Congress modified the statute so certain refundable credits are treated as negative amounts of tax for deficiency calculation purposes. The court cites its own precedent in Galloway, explaining that disallowing refundable credits can still produce a deficiency because the tax imposed becomes larger than what was shown on the return. So yes, your tax can be zero on the face of the return, but for deficiency math, refundable credit can push the tax imposed term below zero. Then the court applies the formula using the numbers in the record. The opinion states that under the relevant rule, the negative amount of tax imposed on the return side is negative about $4,000, calculated as zero tax minus about $4,000 of refundable credits the parties agreed she was entitled to. Then it explains the IRS error, setting the ACTC to about $17,000 resulted from the IRS mistakes, believed that the refundable credit amount should be increased by nearly $16,000, and that mistaken belief corresponded to a negative tax imposed and generated the erroneous rebate. The court even writes out the deficiency computation and simplifies it to show the deficiency equals nearly $16,000. Finally, the conclusion. The court states there is no dispute of material facts. The IRS recalculated the rebate erroneously. The petitioner tax imposed for 2020, resulting in issuance of a rebate refund to her for the difference between the mistaken calculations and what she reported. And as a result, she owes a deficiency in the amount of the error, nearly $16,000. So what did we learn in regular human terms? First, the label computer error doesn't automatically save you. The court basically says, sure, a computer mistake is the root cause, but the mechanism of the error doesn't decide the legal category. The legal category turns on whether the refund was tied to a recalculation of the tax imposed. Second, refundable credit live in a weird tax dimension where tax imposed can be negative for deficiency purposes, which means my tax was zero is not the argument people want it to be, especially when the IRS has already sent you roughly $21,000 and now pointing at nearly $16,000 of it, saying that part was a rebate, give it back. Third, and here comes the satire, direct deposit is fast, but tax law is patient. The money can arrive like a lightning bolt, but the correction can show up years later in the form of deficiency notice, with the emotional warmth of a parking ticket. And the court points is that if the IRS paid the money because it believed, even mistakenly, that the law supported that payment through a recalculation of the tax imposed, then the IRS can use deficiency procedures to unwind it. Final thought on that is, if your return asks for about $5,000 and you get $21,000, enjoy the moment emotionally, but don't emotionally spend it, because the tax court's message here is that error doesn't necessarily mean free. Sometimes error means we'll be back, and it means the fight will be about whether IRS mistake was connected to recalculation of your tax liability, not whether someone fat-fingered a number. In this case, the court said the IRS mistake still counted as a recalculation of the tax imposed, so the nearly $16,000 erroneously portion was treated as a rebate refund and became a deficiency. My name is Alex Dvorkin. I'm a certified public accountant in the state of California. If you like this video, please subscribe and follow us for more tax court case reviews. We'll see you in the next tax court case review.